Can you predict your future financial needs? It's a tough question, right? We all like to think we can plan everything out. We imagine what our lives will look like in 5, 10, even 20 years. But life throws curveballs. Your goals today might not be the same tomorrow, and that's okay. Think about it. What were your biggest concerns 10 years ago? Were they the same as today? Probably not. Maybe you've started a family, changed careers, or faced unexpected challenges. Life happens, and our financial needs shift right along with it. The key takeaway? Don't beat yourself up if you can't predict the future perfectly. None of us can. Instead, focus on building a solid foundation and being adaptable to change. Remember that big promotion you were gunning for? What if you decided to take a different path? Maybe you started your own business or took time off to travel. Our priorities change. What matters most to us now might not hold the same weight in the future. That dream house you're saving for, maybe you'll realize you'd rather live in a bustling city or a quiet countryside. Your dream car? It might be replaced by the desire for financial freedom and early retirement. The point is, life is fluid. Don't get so caught up in a rigid plan that you miss opportunities to embrace new dreams and aspirations. Be open to change and allow your financial plans to adapt alongside your evolving goals. Let's talk about Charlie Munger. He's a smart guy, right? He once said, "The first rule of compounding is to never interrupt it unnecessarily." Think about that for a second or two. It's not about getting rich quick. It's about steady growth over time. Moderation is key. You don't need to chase risky investments promising unrealistic returns. Focus on building a diversified portfolio. Invest consistently. Let the power of compounding work its magic over the long haul. Remember, Rome wasn't built in a day. Financial success takes time, patience, and a commitment to the long game. Don't get sidetracked by get-rich-quick schemes. Slow and steady wins the race always. When it comes to investing, you have 3 basic options. Each of these options comes with its own set of advantages and disadvantages, and understanding them can help you make more informed decisions. First, you can pay the price. This means buying into investments that are currently popular and therefore expensive. These investments are often in high demand, which drives up their price. Think of it like buying a hot stock at its peak. While this can sometimes lead to quick gains, it also carries the risk of buying at a high point and seeing the value drop soon after. Second, you can accept volatility. This means buying into investments that are considered riskier but have the potential for higher returns. These investments can fluctuate wildly in value, much like a roller coaster ride with its twists and turns. There will be ups and downs, but you hope the ups outweigh the downs in the end. This approach requires a strong stomach and a long-term perspective. If you can handle the ride, the rewards can be substantial, but the risks are equally significant. Third, you can seek less uncertain assets. These are typically lower-risk investments with lower potential returns. These investments are more stable and predictable, offering a sense of security and peace of mind. Think of it like a slow and steady savings account. While the growth may be gradual, the risk of losing your principal is minimal. Each option has its pros and cons. The key is to understand your risk tolerance, investment timeline, and financial goals before making any decisions. By carefully considering these factors, you can choose the investment strategy that best aligns with your personal financial situation and long-term objectives. Remember, there's no one-size-fits-all approach to investing. Bubbles burst, be careful out there. Ever heard of a financial bubble? It's a phenomenon where the price of an asset inflates rapidly, far beyond its intrinsic value. It's when the price of something gets way out of line with its real value. Remember the dot-com bubble? It was a classic example. People were buying up internet stocks like crazy, even though many of these companies had no real profits. What happened? The bubble burst and a lot of people lost a lot of money. The same thing happened with the housing market in 2008. Here's the thing, it's easy to get caught up in the hype. The fear of missing out can cloud your judgment. Everyone's talking about the next big thing, and you don't want to miss out. But it's crucial to stay grounded. But remember, what goes up must come down. Market corrections are inevitable. Don't let fear of missing out or FOMO drive your investment decisions. Always do your research. Look at the fundamentals. Understand what you're investing in. Know the risks and the potential rewards. and be wary of anyone promising guaranteed returns, especially if it sounds too good to be true. It probably is. Scammers prey on greed and fear. Stay informed by reading credible sources and consulting with financial advisors. Knowledge is your best defense. Educate yourself continuously. The more you know, the better equipped you'll be to navigate the financial markets safely. Remember, smart investing is about patience and diligence, not quick wins. Be careful out there. Different games, different players. Here's something else to consider. Not everyone is playing the same game. A day trader with a short-term focus might take on more risk than someone saving for retirement. A real estate mogul has a different perspective than a young entrepreneur. The point is, don't blindly follow financial advice from someone with different goals and risk tolerance than you. What works for them might not work for you. It's like taking driving directions from someone heading to a different destination. You'll end up lost. Understand your own financial goals, risk appetite, and time horizon. Seek advice from qualified professionals who understand your unique situation and can guide you toward investments that align with your personal circumstances. The pessimist's trap. Why it feels so right. Let's talk about pessimism. It's tempting, isn't it, to focus on what could go wrong, to expect the worst-case scenario. And you know what? Pessimism can feel pretty smart. After all, if you expect the worst and it happens, you're prepared, right? But here's the problem with pessimism. It can paralyze you. If you constantly focus on the negatives, you might miss out on opportunities. You might be too afraid to invest, to take risks, to pursue your dreams. Pessimism can become a self-fulfilling prophecy. If you believe you'll fail, you're less likely to take the actions necessary to succeed. You're more likely to give up at the first sign of trouble. Optimism, the long game. Now let's talk about optimism. It's about having a positive outlook, believing in a brighter future. It's not about ignoring the challenges, but rather about approaching them with a can-do attitude. Optimism is about understanding that setbacks are a part of life. It's about learning from your mistakes, dusting yourself off, and trying again. It's about believing in your ability to overcome obstacles and achieve your goals. In the context of finance, optimism is about focusing on long-term growth even when the market is turbulent. It's about understanding that while there will be ups and downs, the overall trend is upward. Seeing the forest for the trees. Imagine you're standing in a forest, but all you can see are the trees right in front of you. The dense foliage, the towering trunks, and the thick underbrush can make it hard to see anything else. You might feel lost, overwhelmed, even a little scared. The sheer number of trees can be intimidating, making it difficult to find your way or see beyond the immediate obstacles. But what if you could climb to a higher vantage point? Imagine scaling a hill or a tall tree, giving you a broader perspective. Suddenly, you see the entire forest laid out before you. The paths, the clearings, and the way forward become visible, offering a sense of direction and clarity. You see the paths, the clearings, the way forward. That's what optimism does. It allows you to rise above the immediate challenges and see the bigger picture. Instead of getting caught up in the daily ups and downs, you can maintain a steady course. When you're bombarded with negative news and market volatility, it's easy to get bogged down in pessimism. The constant barrage of information can cloud your judgment and make you lose sight of your goals. But remember to zoom out, to see the forest for the trees. By taking a step back, you can gain a clearer understanding of the situation and make more informed decisions. The world is full of opportunities for those who approach it with a positive and optimistic outlook. By maintaining a hopeful perspective, you can navigate through challenges and seize the possibilities that lie ahead. Just like a map can guide you through a forest, a positive mindset can help you chart a course through life's complexities. Embrace the journey with confidence and optimism. Section 10. Don't let fear hold you back. Fear is a powerful emotion. It can keep us safe from harm, but it can also hold us back from achieving our full potential. When it comes to finances, fear can lead to inaction, to missed opportunities, to a life lived far beneath our means. Don't let fear dictate your financial decisions. Don't let it stop you from investing in your future, from pursuing your dreams, from living a life of abundance. Remember, knowledge is power. The more you understand about finance, the less fearful you'll be. Educate yourself, seek guidance from trusted advisors, and make informed decisions based on your individual circumstances. Section 11. Believe in the future. The future is unwritten. It's a blank canvas upon which you can paint your hopes, your dreams, and your aspirations. Don't let pessimism and fear dim your vision. Believe in the power of possibility. Believe in your ability to create a brighter future for yourself and those you love. Embrace optimism. Embrace the long game. And watch as your financial future unfolds in ways you never thought possible. Remember, the only limits are the ones we set for ourselves. So what are you waiting for? Go out there and create the future you truly deserve.